Imagine a single three-digit number quietly shaping your financial destiny, often without you even realizing it. This number isn't just a statistic, it's a powerful force that can open doors or slam them shut. It's your credit score, and it's one of the most important numbers in your entire financial life. Over the course of your lifetime, your credit score could cost you, or save you, over $100,000. That's right, this single number can determine whether you pay sky-high interest rates or secure the best deals available. It can mean the difference between financial stress and financial freedom. Your credit score quietly dictates the interest rates you're offered on car loans, mortgages, and credit cards. Lenders use it to decide if you're trustworthy with their money. A higher score can unlock lower rates, saving you thousands on big purchases. A lower score, on the other hand, means you'll pay more, sometimes much more, over the years. Think about it. A lower credit score doesn't just mean a few extra dollars here and there. It can add up to thousands, even tens of thousands, lost to lenders in the form of higher interest payments. That's money that could have gone toward your dreams, like travel, education, or building wealth for your family. The gap between a good and an excellent credit score is more than just a number. On a typical home loan, it can mean saving $100,000 or more over the life of your mortgage. That's a life-changing amount, enough to fund a child's college education or boost your retirement savings. Yet, despite its massive impact, most people ignore their credit score. They don't check it regularly, or they assume it's out of their control. But the truth is, your credit score affects your daily life in ways you might not even notice, from getting approved for an apartment to setting up utilities or even landing a job. The good news? You have more control than you think. Your credit score is a reflection of your financial habits, like paying bills on time, keeping balances low, and managing credit responsibly. And habits can change. With the right knowledge and a few smart moves, you can boost your score and take charge of your financial future. In this video, we'll break down exactly how your credit score works, show you practical steps to improve it, and reveal how to leverage it for better opportunities. Your journey to a stronger financial future starts right here. Let's get started. Let's clear the confusion. Credit scores can seem mysterious, but they're actually pretty straightforward once you know the basics. If you've ever wondered why your loan application was approved or denied, or why your credit card interest rate is what it is, the answer almost always comes down to your credit score. At its core, a credit score is simply a three-digit number that represents your credit worthiness. Think of it as a quick summary of how you've handled borrowed money in the past. This number tells lenders, landlords, and sometimes even employers how trustworthy you are when it comes to paying back what you owe. It's like a financial trust meter. If your score is high, you're seen as reliable. If it's low, you might be considered a risk. Lenders use your credit score to quickly judge the risk of lending to you. It helps them decide not just if you'll get approved, but also what interest rates and terms you'll be offered. A higher score can mean lower interest rates, saving you money over time. So, what does your score mean? If you have a high score, you're considered a low risk, someone who's likely to pay back loans on time. But if your score is low, lenders might see you as a gamble, and you could face higher rates or even be denied credit altogether. But how is this number calculated? It's not about how much money you make, or even your personality. Instead, it's determined by complex algorithms that analyze your credit reports, records of your borrowing and repayment history. The three major credit bureaus, Equifax, Experian, and TransUnion, are responsible for tracking your borrowing history. They collect information from banks, credit card companies, and other lenders to build a detailed picture of your financial behavior. Your credit score is a summary of all that history, rolled into one number. It's like your financial reputation, condensed into a single snapshot that lenders can use to make quick decisions. Remember, your score isn't about how wealthy you are, it's about how reliably you use credit. You could have a modest income and still have a great score if you manage your debts responsibly. The good news, your credit score isn't set in stone. It changes over time, reflecting your most recent financial behavior. If you've made mistakes in the past, you can take steps to improve your score by paying bills on time, reducing debt, and being smart about new credit. By understanding what matters most to your credit score, you can take control of your financial future and build a reputation that truly works for you. Now let's break down the numbers. Most scores run from 300 to 850. Below 580 is poor. Very hard to get approved for anything. 580 to 669 is fair. Possible but expensive. 670 to 739 is good. Better rates, more options. 740 to 799 is very good. Prime borrower status. 800 plus is exceptional, the gold standard. Banks, credit cards, landlords, insurers, even utility companies use your score. The higher your score, the more money you save and the more doors open. Your credit score follows you everywhere. It's one of the most important numbers in your life. To build a high score, you need to know what counts. 5 factors matter: payment history, 35%, amounts owed, credit utilization, 30%, length of credit history, 15%, new credit, 10%, and credit mix, 10%. Payment history and utilization make up 65%. Focus here for the biggest impact. Think of payment history as your reliability grade, utilization as your breathing room, length as your experience, new credit as your eagerness, and mix as your versatility. We'll break down each factor and show you exactly what helps or hurts. Forget jargon. This is your blueprint for a top score. Let's start with payment history. Payment history is king, 35% of your score. Every on-time payment builds your reputation. One late payment can hurt for years. Always pay bills on time. Automate payments to avoid mistakes. Payments over 30 days late get reported and can stay on your report for 7 years. The later the payment, the worse the damage. If you've slipped up, don't panic. Recent positive history helps recover your score. Never skip payments or let bills go to collections. That's devastating. Your #1 priority, a perfect record of on-time payments. This habit is the foundation of your financial reputation. Next up, credit utilization, 30% of your score. It's your balance divided by your total credit limits. Keep utilization under 30%. Under 10% is even better. High scores often mean using less than 5% of available credit. Pay down balances for a quick boost, or ask for a credit limit increase to lower your ratio instantly. Maxing out cards or carrying high balances hurts your score, even with on-time payments. Don't close old cards. It can spike your utilization. Treat your credit limit as a ceiling you never touch. Low balances =, a happy score. Length of credit history, 15%, and new credit, 10%, are about patience. Lenders want to see a long, stable track record. Keep your oldest accounts open, even if you rarely use them. Closing old cards can lower your average account age and hurt your score. New credit. Too many applications in a short time looks desperate and lowers your score. Space out applications and only apply when necessary. Each hard inquiry causes a small, temporary dip. Before a big purchase, avoid new credit for 6-12 months. Build credit early, keep accounts open, and be strategic with new credit. Patience pays off. Ready for quick wins? Here's how to boost your score fast. Pay down credit card debt using the avalanche or snowball method. Lower balances mean higher scores. Ask for a credit limit increase to instantly improve your utilization ratio. Become an authorized user on someone else's well-managed card to piggyback on their good history. Check your credit reports for errors. Mistakes are common and can cost you points. Get your free reports at annualcreditreport.com and dispute any inaccuracies. Even one error fixed can mean a big jump. These steps can show results in as little as 30-60 days. Take action now. Your future self will thank you. Small moves, big impact. Quick wins are great, but true, lasting financial success is built on the foundation of strong, consistent habits. One of the most powerful habits you can develop is making your on-time payments automatic. By setting up automatic payments for your bills and credit cards, you remove the risk of forgetting a due date and avoid costly late fees or dings to your credit score. This simple step not only saves you time and stress, but it also ensures your financial reputation remains spotless. Think of it as putting your financial life on autopilot so you can focus on your goals without worrying about missing a payment. Another key habit is keeping your credit card balances low and always respecting your credit limits. High balances can hurt your credit score and make it harder to get approved for loans or better interest rates. By paying off your cards in full each month, or at least keeping your balances well below your limits, you show lenders that you're responsible and trustworthy. This discipline not only boosts your score, but it also keeps your debt manageable and your financial stress low. Don't overlook the value of your oldest credit accounts. These accounts are like the cornerstone of your financial fortress. The longer you've had them open and in good standing, the more they help your credit score. Even if you don't use them often, keeping them open shows a long positive credit history. So, before you close an old card, consider the impact it could have on your credit profile. When it comes to new credit, be strategic. Every time you apply for a new card or loan, it creates a hard inquiry on your credit report, which can temporarily lower your score. Only apply for new credit when it truly matters, like when you need to consolidate debt, take advantage of a great offer, or make a major purchase. Thoughtful decisions now can pay off for years to come. Over time, these small, consistent habits add up. Each on-time payment, each low balance, and each wise decision is like adding another brick to your fortress of financial freedom. The walls grow stronger with every good choice, protecting you from financial storms and opening doors to new opportunities. A high credit score isn't just a number, it's a key that can save you thousands of dollars on major life purchases like homes, cars, and even insurance. Lenders reward responsible borrowers with lower interest rates and better terms, putting more money back in your pocket for the things that matter most. Beyond the financial benefits, a strong credit score gives you options, security, and peace of mind. It means you can handle emergencies, seize opportunities, and live life on your own terms. Imagine the freedom of knowing you're prepared for whatever comes your way. Remember, every on-time payment and every low balance is another brick in your fortress. Over months and years, these bricks form a wall that stands strong against setbacks and supports your dreams. The effort you put in today builds the security you'll enjoy tomorrow. You are in control of your financial destiny. Your credit score is a reflection of your choices, your discipline, and your commitment to your future. Take pride in every step you take toward building your financial fortress. Start today, pull your credit reports, review your accounts, and pick a strategy that works for you. Set clear goals, track your progress, and commit to making smart financial decisions every day. The journey may take time, but every step brings you closer to true financial freedom. Your credit score can be your most powerful financial tool. Start building your fortress now, and watch as your future becomes brighter, more secure, and full of possibility.